You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back for the penultimate Volatility Views for the mad, insane vol year that has been 2025. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been binging and mainlining throughout the year. A couple of reminders here at the end of the year. First off, if you're not subscribed to the full network, if you're one of the Vol Views hardcore, A, we love you, and B, you're missing out on a whole bunch of other fun stuff. Make sure you're checking out the full network wherever you get your favorite podcasts. And of course, if you want to go big or go home and you're tired of being home, maybe because your family's there and they're driving you crazy, check out the pro, theoptionsinsider.com/pro is the place to go. Still got a few days left to get your name in the hat before we draw the big end of year December pro trading crate, as well as, of course, oddities coming up after this show, the official after party of Volatility Views, as well as, of course, pro Q&As. And yeah, that forthcoming Vol Deathmatch 2.0 should be a banger. Theoptionsinsider.com/pro is the place to go as we go around the horn, see who's joining us for this penultimate Vol Views of 2025. First, out to the hinterlands of Chicago for at least a little while longer while he's still packing up his houses in the big asset swap of 2025. None other than the once future and present Dr. VIX/VStocks, aka Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show. How goes the great asset swap of 2025, sir?
You guys should be thrilled that I've been able to step away from packing boxes for an hour.
I think you should be thrilled. That's rough duty, packing boxes. Moving is up there with, like, an IRS audit, jury duty, the low points of human existence.
Yeah, well, I'm going to give you a piece of advice from recent empty nesters. it's so much nicer that we've completely cleaned our house out in our mid 50s. We could not imagine doing this 20 years from now. I mean, really, there's a piece of life advice. That and don't plant your crops too early.
Russell, bail on everything 20 years before you have to. That's Russell's life advice here.
Throw it all out.
All right. And also joining us, I do believe if the technology gods are smiling upon us, good old Mr. Michael Listman, aka Mr. UVXY Trader, joining us for the first time in quite some time. It's been since April of 2024. So, not much happening in the market since April of 2024. Michael, welcome back to Vol Views for this penultimate episode, sir.
Good to be here, man.
There he is. All right.
There I am.
The magic of technology. Oh, how wondrous it is as we keep on rolling right on into a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down all the action in the world of Vol on this truncated, shortened holiday trading week. Hope you all had a great Christmas or whatever the heck it is you celebrate. At the very least, you enjoyed a nice respite from the markets there yesterday. Coming in to this penultimate Friday here. Well, actually, for the year proper, this is the final Vol View. So I guess technically next Friday will be the second. So I guess technically this is the final Vol Views, which is just wild to say out loud. We will be back next week, of course, but that will be a new year. So all kinds of wild stuff. And speaking of wild stuff, it's been kind of an interesting week in the market. It usually is in these kind of shortened holiday weeks. We had the stub session on Wednesday, of course. Yesterday, the markets were closed, but mostly people have been waiting for Mr. Santa Claus to arrive in the market, get the hotly anticipated Santa Claus Rally. And it seemed like for a while there, the first half of December, Santa Claus wasn't coming. He was playing the Grinch this year. And then the second half of December, post-Fed, it seems like the market, Uncle Mike and his buddies out there, his cabal of bulls, got the bit in their teeth, and they've been just buying this market pretty much ever since, hitting new all-time highs this week in the S&P. And then, of course, just taking vol to the woodshed. We said on the show last week, it seems like December arrived finally, but a wee bit late, and that is the case again this week as we're coming into this, again, now the last episode here for 2025. Kind of a weird mixed bag here to end the year. S&P off about 0.06%, Dow off about 0.2%. NASDAQ up slightly, but wait 5 minutes, that could all change. They were all red earlier, so it's one of those days where we're kind of just vacillating around, listeners. And our old pal VIX Cash, lest you were looking, maybe hoping for a final appearance of the logins for 2025, he is gone. He has left the green room. We are over 10 handles away from his entry point. Yeah, 1385. So forget a 15 handle in VIX, listeners. 1385 was where VIX Cash was when we kicked off the show. Down over 1.5 points, about 1.55 points from where it was this time last week. So I've been mocking all you folks who had those 15 puts all year because they pretty much sucked all year. If you got some in your back pocket, now might be your time to strike. Take the profits. Get the heck out of Dodge. It's something we've been talking about on the show for a while. Monetize those puts when you have an opportunity, especially if you're some of the many who've been piling into that 15 strike all year. You got some money to make back, so make sure you don't leave any on the table right now. Volley, our old pal, Mr. Scott Nations, at the money. Just the facts, ma'am. Vol, and also rumor has it, a participant in the forthcoming Vol Deathmatch 2.0. Volley hanging out exactly in 11 right now, down about 1.5 points as we're kicking off the show. And everyone's favorite, the Vol of Vol itself, aka VVIX, at a nice even 85 as we kicked off the show, down about 2 points from where it was this time last week. And of course, back from a few weeks ago, down well shy of the par strike that it was hanging out at for quite a while. All right, Michael, it's been a while since you've joined us. We'll get to all the UVXY fun in a second, but before we get there, what is catching your eye in the world of vol on, I guess this is our final vol views of 2025, sir?
Yes, it would be the last one. This is, I guess, par for the course for a Santa Claus rally. Vols dropping off the table. Not worried about anything that's going to be happening coming up here, but January's on tap, so I expect it will change shortly. I think it waited till the second week of January last year before it finally broke, but we'll see how long they can hold out this time.
Were you surprised how long they held out this year? Because it didn't seem like we were getting Santa Claus or the vol execution that everyone expects this time of year until about a week ago. Then all of a sudden it started kicking in. Were you surprised it took that long?
Well, you can't really afford to be surprised. It's going to be early, it's going to be late, but it almost always comes. So as long as you aren't too cute with the timing on it, you'll be all right. I don't know if this will hold until the end of the year or not, but everybody's calling for SPX 7000, so I think we got to get that taken care of. So we probably got some more crush to go through. You're
saying volatility is a wizard. It is neither early nor late. It arrives precisely when it means to and then goes away precisely when it means to. Is that what you're saying, sir?
Exactly.
Might be a good title for the show. Volatility is a wizard. Doesn't seem that some people might not feel that smart right now. And of course, if you bought these 15 puts that we've been mocking all year, you probably feel pretty smart right now. Out to the hinterlands of Chi-Town, at least for a little while longer, until he moves so far away, listeners, right across the street. Mr. Dr. VIX, sir, we've been talking for a while. This December may not play out like Decembers of old where vol goes to die. And for a while there, it seemed like that was the case. We had a lot of debate around the Fed and also consternation over who the next Fed chairman might be. Of course, we are living in this tweet-by-tweet environment on top of that. So a lot of geopolitical other factors could come into play at the end of the year when they normally don't. What's catching your eye? And I guess, again, this final vol views of 2025, sir.
Well, I was taking a look. You know how I like to look at numbers. You know, I'll be doing quant.
Do you like to look at numbers? I didn't realize that.
While you guys are talking, and I just, since we're leading up to the end of the year, I was just taking a look at what's the average of end of the year close relative to the low each year. And we talk about December being such a dead month, et cetera. On average, the VIX closes 50% higher than the annual low in December. So it's low, and it's under a bit of pressure, but it's also probably bracing a bit for next year. Right now, I think we're kind of like right on it. The lowest premium ever was only 5%. So, and that was in 2023. We ended up having a interesting year after that. So I'm gonna keep looking at this and looking at when VIX is really low going into the next year. Is that a good indicator? When VIX is really high, has that been a good indicator? And report back as long as the program goes along. How's that? But that's what I'm looking at is just in VIX. It's acting like you would expect it to act with the S&P 500 making new high or, bordering on new highs or making new highs finally. But how much of that is, having holidays in the middle of the week and how much of that is an actual change in attitude? So I almost feel like I think what Michael said a couple of minutes ago before I started droning on about, the first week of next year. I think the first week or two of next year are going to be very much of a wait and see and get a cue as to what to where the market thinks we're going in 2026.
Where we're going right now is straight into all things UVXY. I know you're surprised, listeners. Usually we save it for the end of the show, but we're making it front and center for the episode this week, listeners, because we are joined by Mr. Michael, who goes by his nom de finance as a UVXY trader. So obviously, he likes to focus on a little bit of UVXY. We mostly talk UVIX, the other side of this coin here on the show. We don't talk UVXY as much, but I want to make sure all you UVXY folks, and you're out there, we see the numbers. The liquidity of UVXY is probably the best argument in its favor at the end of the day. So the numbers are there, even if they are a little bit down right now. UVXY, as we're kicking off the show here, right around 36.75. That puts it off almost exactly 4 points from where it was this time last week. Again, putting up about 20,000 contracts today. If that sounds kind of light, you're right, but it is A, that seasonal time, and B, there's also some after effects of these reverse splits that we'll get into probably here. The ADV, 30,000 contracts a day. That's down 13,000. So if you're used to UVXY putting up 70, 80, 100,000 contracts a day, not quite in that regime right now. So Michael, we'll start there. I mean, when you're not talking to us, you spend your days living in the UVXY verse. What's catching your eye out there in UVXY land right now, sir?
It's doing what it's supposed to do. I mean, it just tracks VX month 1 and month 2, just like a little puppy dog, just like it's designed to do. So it's really like it's getting interesting right now because there's such a premium between VIX 30 and spot VIX. So VX traders are not chasing VIX all the way down to where it's digging its hole, expecting that to pop back up in January. So, and that's, like I said, that's expected. So UVXY is going to seem like it's sitting on a floor here, but that's a lot of contango pressure if VIX doesn't bounce.
A lot of contango pressure indeed. Speaking of pressure, there's always some pressure in UVXY when it goes reverse split. And those are usually the times when it makes it back on our radar, listeners. It did just do that about almost exactly a month ago. It was November 20th when it did a 1-for-5 reverse split. And all of a sudden you got UVXY getting back up into a 40 and above handle. And that's usually when these products that like to erode aggressively, that's usually when they become a lot more interesting for us here on the show. Certainly when UVIX does a reverse split, it becomes a wild, untamed beast. If you ever traded UVIX north of a 40 handle, listeners, you know exactly what I'm talking about. But UVXY just did that dance. It's been something it has to do quite frequently, obviously. The last one, and again, probably one of the reasons why the last time we talked to you, Michael, was in April of 2024, because that's the last time we got a 1-for-5 reverse split, April 11th. Before that, in 2023 and in 2021, they went for the big boy. They went for the 1-for-10 reverse split in June of 2023 and May of 2021. And then before that, all the way back in the year of Volmageddon, 2018, in September, they did a 1-for-5 reverse split. So I guess we're back in the 1-for-5 regime, at least for right now. Michael, kind of give our listeners your thoughts on how do you approach UVXY heading into and then coming out of some of these reverse splits that it always does?
In my world, it's meaningless. It just the notional doesn't change. You're just changing a number on the sidelines. Its movement is completely dictated by the futures movement. Futures move up 1%, then UVXY moves up 1.5%. And that doesn't matter if spot's $100 or if it's $10. So if you just take a 15-year chart of UVXY, put it on log view so that it makes sense, you can't see the reverse splits because there's really no impact that I've ever seen. I know people. It does change the options availability because strikes can either become more or less granular. So if you want to be very laser focused on a percent higher or lower than spot, then you can do that with higher spot prices for UVXY. But outside of that, reverse splits are just a side note for my trading.
And it doesn't concern you about the lack of liquidity because, as I said before, one of the arguments in UVXY's favor, I mean, the top of the list is the liquidity. And about a month ago, going into this split, it was probably doing 4 to 5x as much options paper as it's doing right now. It's doing 20 to 30,000 contracts a day. It was doing 80 to 100,000 not that long ago. So obviously, liquidity tends to fall off a cliff and dry up for a little while after these splits for a lot of the reasons you just mentioned. The options get a little less granular. You have all these kind of vestigial strikes and vestigial symbols that kind of gum up the works. If you have a pre-split position, good luck getting out of that. That's fun. So it does tend to dry up the waters a little bit. Does that not concern you or maybe impact some of your trading at all? It's harder to get off some of your trades maybe?
Again, the notional of the positions, if you look at the market cap of I don't think that's the right terminology for an ETF like that. But anyway, the shares outstanding, the value outstanding doesn't change. So yes, less contracts are traded, less shares are traded simply because spot's higher. But if you're still trading 100K worth of stock, you're just trading more contracts when it's priced at $10 as opposed to when it's priced at $60. But you're moving the same notional. So yes, I mean, market makers like when spot's very low because they get to make a slightly larger percentage. They might tighten up a little bit when spot's much higher. But again, for my trading, I don't really see it that much. So it's kind of a non-issue for me outside of the strike granularity.
So it's not harder to get into or out of your positions after the split. Doesn't impact you.
No, not for my trading. No.
And let's break down your trading a little bit, because like we said, it's been a while since you've been on the show. You are not afraid, sir, to go out and hit a bid on some premium, some juice out there in UVXY. For some of our newer listeners, walk them through your approach. How do you like to trade UVXY?
It really depends on the market. So if we get a large spike, I basically have a signal where I'm looking for something that happens 4 to 6 times a year. So there's a spike level. If you look back historically on a quantitative basis, anywhere close to 30% spike over the current all-time low is my signal to get in, and basically I'll sell spreads, at the money spreads out 1, 3, 6 months out, just to kind of spread out my exposure using a fairly large percentage of my capital. But outside of that, I'm playing a beta slippage game, pairing UVXY against SVIX. I'm just short both. They both have beta slippage, and I just collect that over time and just manage the notional on each side. So I'm not heavily biased in one direction or the other.
Interesting. We've talked a lot of UVIX versus SVIX on this show for obvious reasons. Not as much UVXY versus SVIX. Maybe that's an interesting pairs trade we need to explore. Mr. Dr. VIX, you've been a big fan of that UVIX versus SVIX trade. What are your thoughts, A, on UVXY in general? What are your use cases for it, or that perhaps lack thereof? And then B, what are your thoughts on what Michael's talking about here, the UVXY versus SVIX beta slippage trades?
Well, the only difference really with UVXY and UVIX is the leverage difference as far as structure, but you do have liquidity issues there. I'm not really trading in and out of UVIX that much. I do a single trade every week, and if I were trying to do things, if I were trading more frequently within that market, I'd probably give UVX a bit more, or UVXY a bit more love, just for the liquidity sake. Also, just because the option market tends to behave a bit better. But that really is why I've leaned toward UVIX versus UVXY. The stuff that I do, and Michael, what I actually found out is if you buy UVIX on the close on Friday and just sell it on the open on Mondays, you'll catch a couple of weekend volatility events each year, and it actually works out over the long term with a whole lot of small losses. It works the same for UVXY. If UVIX suddenly went away, I'd use UVXY and I would just change the sizing around a little bit.
Yeah, Michael, he brings up an interesting point, because for a lot of us, myself included, I definitely put myself in this camp. I think a lot of us are colored. Our experiences with UVXY and its sibling SVXY, not so great. Probably the last time I traded it for size, which was back in the Volmageddon days of 2018. And I don't know, maybe call me crazy, but once they change the contract specs on something mid expiration cycle like that, it just kind of rubs me the wrong way, and I've never really gone back since Volmageddon. So maybe that's my own personal failing, Michael. Maybe I'm just a bitter, angry former trader, but that has made me very anti UVXY and SVXY, even though I do admit the liquidity is there. So what are your thoughts on that, Michael? For those of us who've washed our hands on UVXY, we've moved on to UVIX and others, and just are still bitter ex-spouses, perhaps, of UVXY, sir.
I get that. I understand. And there's a whole bunch of former VXX traders in the same boat. You know, Barclays made the same mistake twice.
Yeah, I've washed my hands of that one mostly too. I guess I'm just a bitter vol guy, is what we're discovering here on the show. Maybe I need to go to therapy, Michael.
It's listed there in the prospectus as one of the risks to trading. So you do have to respect that. But it is such a rare event. I mean, there are 3x spikes that are more frequent than that event. So it's something that you can't really plan on, trade against. But like we were discussing earlier, that's where the liquidity is. You know, I would love to use UVIX as opposed to UVXY, but I don't have the liquidity in the options market that I do for UVXY. When I'm managing my pairs trade, there's zero liquidity in SVIX options, so I can't even go there. So all of my management is done with UVXY options. And it's simply I have to follow the liquidity.
Yeah, there is no liquidity in SVIX. That is true. You can basically overwrite and let it go away. That's about all you can really do with SVIX options.
I had pushed Stuart, Volatility Shares CEO, about getting weekly SVIX options, and finally he pressed on SIBO to get them listed, and nobody's trading them.
Yeah,
they've been going for a year, and I still can't get anybody to trade them.
I was with you. I wanted more liquidity out there, so I thought weeklies would help, and yet for whatever reason, I mean, if you can't get the monthlies, I guess the weeklies are, even in VIX. Look at VIX outside of the standard weeklies, and stuff gets a little sparse out there. But I don't know, Russell, that's not a bad idea. Going back to earlier, maybe we need a new segment, the vol psychology segment, and we can get into people's deep-seated vol hangups. We've already discovered, for me, I am biased against UVXY and VXX and VIX D's 15 puts, so I clearly have a lot to work through, Mr. Rhoads. What do you think?
So, well, we're basically doing a podcast on apparently a market that we just hate.
Yeah, we hate it all. We hate it all.
But you love to. I think it's one that we love to hate. So there, it's.
I'm trying to be more open-minded. I'm trying to let the UVXY folks and have to let them have their day in the sun as well. You know, we can't just be hating things all the time on this show. Whenever I toss to you on like UVXY or VXX, you just turn your nose up and scoff. So I'm trying to be more inclusive. I don't turn
my nose up and scoff because there are great uses for those products, but they tend to be short-term trading oriented in my mind, at least the long ones for sure. I'm a big believer that short volatility, that you want to have some short volatility exposure just to continue to grind higher on your behalf, especially when we're in some really cool contango like we are right now. I just feel like that's great exposure to have. I even took a look at comparing owning SVIX with some consistent short strategies in SVIX, really did better since mid-year, since it's been pretty tough to be short volatility, or really going back, I guess, over the last 9 months now. I like it for what it's supposed to do. When I was at SIBO, there was a really smart guy in research, and his comment when we had an internal meeting after Volmageddon was, I don't know what everybody's all upset about. The funds did what they were supposed to do. They followed the futures. So, now the fact that that maybe the futures caused it, that's a different story.
That's a different story. Or the fact that they changed the rules of the game mid-game. Yeah. That's never fun. When they do stuff like that.
And that's actually where I got that mentality that I would share around, if you own the long ones, you really are looking at the same mentality as buying an out of the money call or put on a market. Even if the market moves in your direction some, you're still not going to make much of a profit or a profit at all because of the time decay on a normal option. So, but that's just kind of how I think. I think you have to have an option mentality to trade those long funds.
Definitely a little bit quick to get in and get out. Well, Michael, this is our semi-annual check-in deep dive onto all things UVXY. Before we keep rolling with the rest of the show, are there any other thoughts or takeaways you want to leave folks with when they're thinking about potentially trading UVXY, sir? Have at it. The floor is yours. This is the moment where we shine a spotlight on UVXYs.
Just learn the product. Know that it tracks VXM1 and VXM2 exclusively. Doesn't care about VIX. VIX only matters like once a month when M1 needs to come down and touch it. But at that point, M1 is responsible for 4 or 5% of the influence over UVXY's price. It's unfortunately, I don't have a live quote of VX30, which is the 30-day exposure of combination of month 1 and month 2. But just watching that will tell you everything about how all of these ETPs move. There is at least on some platforms, you can track one of the benchmarks, SPVXSP.ID, and that is a VIX 30 index. So you just watch that move every day, and you'll see how all of your ETPs move relative to that, and it's basically tick for tick. I would like to mention SVIX, because there are a lot of people that come to me and ask, hey, I just want a short vol. I want to limit my risk. I don't want to be selling naked calls or anything like that on UVXY. So I'll just go long SVIX, and I would ask them to pull up a 5-year chart of it and just watch how damaged that inverse fund can experience with big SPX drawdowns. It's nowhere near its high, even though UVXY and UVIX are printing all-time lows. It's price path dependent, and if you ever hit a air pocket, you're just going to get crushed.
Interesting. Sounds like you might need some vol therapy for SVIX. We all have the products we need our therapy with, Michael. But yes, you're right. SVIX is a challenging beast. Probably why I let a lot of mine go here as we're coming into the tail end of December here. Speaking of letting things go, we got to keep going with the show. We've been talking a lot about VIX futures and their impact on all things UVXY. They kind of drive a lot of the boat at the end of the day out there in the vol ecosystem, listeners. And as we're coming into this start of the show, actually, we saw, not surprisingly, a Jan coming down a bit. The Jan future was down not quite a full point as we kicked off the show, about 0.8 of a point. And we had the Feb future down almost half a point, about 0.4 of a point. If you go all the way out to August, because why not? That was kind of where we topped out last week. We were at about a 21.5 coming into the start of the show today. That August future was at about a 21.40. So obviously shy of that 22 handle we've been talking about for a while, and down about 0.1 of a point out there. Mr. Rhoads, we'll start with you, sir. What is catching your eye on the vol term structure for our final vol views of 2025, sir?
It's steep. It's steep, and I'm trying to move quickly and take a look at how it compares to Europe and see if we're still steeper than Europe. But that spread, January doesn't expire until the 21st, so I guess it's a little bit longer expiration cycle. But right now, V stocks is at 14, and they're not open today. But they settled at the January future settled at 1660 yesterday. We've got a much wider spread. When you're taking a look, going through my tabs now, nothing wants to cooperate with us today. But it's much more dramatic right now with respect to VIX. Yeah, it's 3 full points with respect to VIX with January, and freaking February is a 5-point premium relative to spot VIX right now. I don't. If I speak very slowly, I can tell you where we were on this day last year. Not nearly like that. Basically, about a point at the most. And February was less than a point higher than January. Right now, it's at a 2-point premium. I'll throw something out there that I threw out when we saw how steep things were with respect to, or just how funky things were with December and November this past year, and December kind of holding up for a while. Until we got past that last Fed meeting. If you think we're going to get a volatility spike in early 2026, buying the Jan future and shorting the Fed future really looks attractive. Because if you're wrong, you got to assume the spread between those two is going to narrow.
Yeah, it's almost as if the market is maybe pricing in a little bit more action into the early portion of next year, which, given recent precedent, not exactly surprising. We said many times on this show here how January, everyone assumes it's a very quiet period in the vol markets. But go back, just look over the last 5 years, listeners. How many Januaries came roaring in like a lion? The answer was quite a few, and in many different and surprising ways. Michael, same question for you. Obviously, the vol term structure is a big portion of what you do. It's kind of dictating when and how you're setting up out there in UVXY. What is catching your eye out there in the VIX futures this week, sir?
So yeah, if you look at that current term structure there, it is steep, and that is almost what it was like for the last half of 2016 and almost all of 2017, where it was just a short vol trade was just printing money like crazy. I doubt it will hold for very long.
You're fading this too.
I would love to see this go on for 12 more months. That would be great, but
that would make a lot of our D's 15 put buyers very happy, I have a feeling.
It would. But the other thing, and this is traders should be aware of, when there's that much of a buffer between spot and VX30, a VIX spike will get absorbed. So VIX could run to 20, and you're thinking, hey, that's up. Not to do the faux pas of quoting a percentage, but hey, that's up 50%. The vol ETPs will not follow that, because so much of that VIX spike will get absorbed by that current 3 or 4 point buffer that they already have built in.
Yeah, that's a great point. We talk so many times here on the show that it's so challenging to capture and monetize upside in the VIX options alone, let alone, as you mentioned, in the various ETPs. You're right. It's all going to get sucked up in the current term structure. And you're like, wait a minute, I had the right position on, and I still didn't make money. It's a challenging thing to monetize the upside here in the vol market. And that will probably continue at least into early 2026. Listen, let's see what's going on right now. This is the latest we've gotten to VIX options in the show in a while, but I like it. Mixing things up here on our final vol views of 2025. That's good, because the VIX options market not really lighting the world on fire this week. Go figure. Truncated, shortened holiday week, not really putting up the numbers. As a result, our ADV, which I've been saying for a while, keep an eye on that. It's kind of unusual to have VIX options still averaging north of 1 million contracts a day this late into December. Well, like we said on the show last week, December finally arrived in the vol market last week, and it's finally arriving in VIX options this week as well, as that ADV coming back to some semblance of normalcy. 778 is where it's hanging out right now, down about 205,000 contracts from this time last week. So yeah, December coming, but coming kind of late out here. And still 778 for this time of year is actually still an impressive amount of volume. A spoiler alert, not getting there today. Only 230,000 contracts on the tape. So unless something really hot lights up the tape in the second half of the session, probably not gonna increase that ADV today. Going out to the top 10, what is hanging out for size in VIX options right now? Well, we're still pretty much hanging out at the exact same structure we were a week ago. We're still 8-2 calls over puts. So you might be thinking, all this juice coming off the top might incentivize some more put action, but not enough to change up our top 10 this week, listeners. A number 10 on the board this week gets us back to our old pal, the Jan 20. So a lot of people right now might be looking at the board and say, you know what? I have a feeling this might be a little bit too cheap to kick off the new year. So they want to take a little bit of a nibble to the upside. And lo and behold, our old pal, the Jan 20s, a very psychological level for a lot of people out there, kicking off the number 10 spot this week. 145,000 contracts on the docket for them. Number 9, 147,000 of the Jan 22s. So maybe you want some upside, but a little bit cheaper. Here come the Jan 22s. Then number 8, you really want to go upside. 152,000 of the Jan 70s, 7-0s. Yeah, some more of that fun lighting it up. Number 7, our first of 2 puts. In our top 10, 154,000 of the Jan 16 puts. So people have been listening to the show at least. They're bailing on the 15s, but not so much on the 16s yet. Still about 154,000 of those open. So raises the question, what does it take to get you to monetize your puts? Apparently not this week. Number 6, $1.56 of the Jan 21s. Number 5, right back to the fun, 163,000 of the Jan doubles. If you said to yourself, I like those Jan doubles, but they're not quite far enough out of the money for me, but I also don't want to go all the way to the Jan 70s. How about number 4, 168,000 of the Jan 60s? There is wild Jan upside for days here in our top 10 listeners. Number 3, our first Feb offender on the list. It is our old pal, 188,000 of the Feb 47 halves. Whoever loves this 47 half strike, they have done so all year this year, and they continue to do so into next year. Number 2, 228,000 of the Feb 35s. And the big dog, number 1 with a bullet out there this week. Not the 15 puts in Jan. Obviously not the 16 puts in Jan. We just talked about those. Nope. 273,000 of the Jan 17 puts, listeners. So these days, a fairly meaty put, all things considered, taking the top spot in VIX land. But speaking of VIX land, it is now that time, listeners. It is the time you've looked forward to or perhaps dreaded. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
The song's so nice, we are legally obligated to play it twice. Mr. Rhoads, sir, what caught your eye in a, shall we say, a little bit quieter VIX week, sir?
Well, Monday was and I know we're short on time, so I know we're coming up against it, so I'll be somewhat quick.
We got plenty of time. Go to town, sir.
Okay. Well, I did note on Monday, I've been complaining that going through the Bloomberg pages, there have only been 2 or 3 pages for each, for that contained weeklies. There were like 8 on Monday. A lot of people playing the short trade into expiration on Monday. The trades that I'm going to highlight instead of going through those, I'm going to talk about some that have not expired. So on Monday, this was kind of interesting with VIX at 1442. Both of these trades are opening non-spread sellers. Somebody sold 5,000 of the VIX January 7th, 22 calls for 28 cents. Around the same time in different types of lots. I don't know if this is a short stupid or what, but I don't think it may not be the same trader. Somebody sold 5,000 of the VIX January 7th, 20 calls for somewhere between 45 and 46 cents, depending on the lots. All of those were like midday on Monday. VIX was at 14.5 for that second sale. So I don't know. Maybe why didn't they just do the 21s?
Nothing screams end of year vol trading like a short stupid in VIX.
Yeah, and especially end of 2025. All right. So on Tuesday, with VIX at 1384, probably my least favorite trade. I'm actually even not rooting for them. Somebody bought 1,585 of the December 31st, 32 calls for 4 cents. Opening trade. I think the open interest was actually 0. Imagine that when they bought those. A little later on Tuesday, with VIX at 1366, somebody sold 2,000 of the December 24th 15 puts for $1.23 to $1.24. Now, these options, the break even if they had purchased these is 1376. So there was a dime of what I refer to as negative time value there. However, VIX settlement this last week was 1398. So they did do better than if they had waited through settlement. We see those sometimes and they're like, why? Well, and you never know what's going to happen overnight. So on Wednesday with VIX around 1351, we got a seller of 1,500 of the January 7th, 21 calls at 27 cents. So they came in for the 27s or 21s finally. And then today, I'm sure hoping this trade was an exit with VIX at 1411. This was like the first, at one point, it was the only weekly trade for the day. Somebody sold 100 of the December 31st 15 puts for 29 cents.
There we go. They're finally monetizing those stupid things.
Yeah, well, I came across, I mentioned it. That Tuesday trade, that was definitely monetizing a trade. When they sold them for $1.23 to $1.24.
Yeah, that's a little better.
That was the open interest was like 12,000. So there's no question in my mind that was not an opening trade. If that was an opening trade, I want to talk to him. Not a good opening, not a smart one. So there. So yeah, and I've been looking at, believe it or not, the January 200 puts and the February 200 puts. I know that's completely opposite of weeklies. There's decent open interest there, and the opening transactions were shorts.
Oh.
Why in the We're gonna spend all year trying to figure out what the hell people are doing with the 200 strike puts in VIX.
And we have inspired more flow, and it's the other way.
Yeah. I mean, one thing that I thought it might be is, and because we've got Michael, I did want to bring it up. Could it be an ETF that's supposed to be short or long futures, and they're doing something in a different market to kind of replicate it?
Michael,
we can't, for the life of us, we can't figure out. And actually, before it was a long 200 put and a short 20 put versus it. But these last, we got no clue, man. It's really difficult to figure out what the heck, and it's terrible capital usage as well.
Yeah, we've been profiling for a while this action, quote unquote, on these VIX Jan 200 puts, and either way you slice it, it is mystifying. I'm not sure if you've kept up with that drama, sir.
So you're saying they sold those?
Well, yeah, they sold the Januaries and sold the February. They've got they're short like 140 of the Januaries, and how many of those Februaries? Oh, and then there's also a huge short position in the 190 puts that expired in January.
I see size in the 180s, 190s, and 200s.
Yeah, originally it was just the 200s, and it was how this started. And I apologize for talking over you here, but the way that it started was back in July. We saw a large seller of the or large buyer of the DEES 200 puts, who also sold the DEES 20 puts. And their break even on it was like $27 at settlement. They held it all the way through settlement. We don't know if they got out of the 20s, but we're certain they held the 200s through expiration. So at minimum, they if they held on to the short 20s, they cashed out at 180, but the cost was 171.90. Why? And I'm not expecting you to answer that, because we spent 6 months on it. So I don't mean to put you on the spot.
They could be trading against their book somehow. I mean,
I know.
When I look at that, I'm seeing the cash that would be coming into their account. I mean, obviously, that's got to be covered. But you're sitting on cash. That's a lot of cash per contract, 20 grand or 180 or what, 18,000 per contract. That's cash sitting in your account. You've got IB paying you 4% on that. They've got it covered on the other side. It's kind of like a SPX box spread where you're just trying to make money or borrow cheaply. It could be anything like that.
Yeah, let's see what is lighting it up out here this week, listeners. And a not exactly rock'em sock'em robots week for VIX options, so we'll kind of burn through these. Today, not even 250,000 contracts on the tape, only about 230,000 contracts on the tape. The hot option in VIX land, such as it is, nearly 14,000 of the Jan 17s. If you're wondering what's a Jan 17 go for, about $1.25. So bear that in mind if you're thinking to scoop some Jan upside. Also, something I've been mentioning in other shows, that Jan cycle is kind of short. So if you think you're getting a whole bunch of duration buying Jan, maybe think again. Just take a look at that one. And then number 2, we got about 10,000 of the Jan 70s, our old pal, the Jan 70s. If you're wondering what those bad boys are going for, a whopping 8 cents. So there you go. Get yourself some juicy upside. Let's keep going out to, obviously, yesterday we were closed. Let's keep going out to Wednesday. A bit of a stub session on Wednesday, so not much volume going out then as well. Only 235,000 contracts total all day long, changing hands in VIX land. The hot option, such as it was, nearly 14,000 of the Jan 14 puts. So, we've been mocking the 15 puts forever. Why not try your hand at the 14 puts? If you're wondering what are those going up for, probably about a dime. Looks like about a dime. So if you got a dime you never want to see again, maybe the Jan 14 puts are your huckleberry. Number 2, 13,600 of the Jan 16 puts. That paper lines up pretty much 1-to-1, so you might have a put spread or maybe a bit of a roll. Though if you're rolling to the 14 puts, you're only spending a dime of that money, but still, it's a dime you could spend on other things. It looks like there's OI on both, so it could potentially be closing. And number 3, 13,000 of the Jan 50s. Number 4, 10,000 exactly of the Jan 60s. And then rounding out a wild stub session, 10,000 almost exactly of the March pars. If you're wondering, those changing hands for about 16 cents. Tuesday, a little bit more paper, 400,000 contracts on the tape. The hot option on Tuesday, such as it was, 27,000 of the Jan 25s. Average price for those about 42 cents on Tuesday. And then Monday was the big dog of the week, such as it was. 646,000 contracts on the tape on Monday. The hot option on Monday, once again, it's like the 17 puts might be the new sexy item for 2026. 52,000 of the Jan 17 puts going up for about almost $1.40 on that day. It looks like there's an OI on that strike, so that could potentially have been closing as well. So if that's the case, you took some off, which is good. You live to fight another day. As we keep on rolling out of VIX land, we are kind of coming up against this. So let's run through some of the rest of the vol ETP ecosystem for this week. We already talked a lot of UVXY. Let's get to the land of the siblings, UVIX and SVIX, shall we? SVIX up about a point from where it was this time last week. Seems to have a hard time really breaching that 24 level to the upside. Putting up a paltry 2,501 contracts today. So once again, talking about the liquidity issues with these products. SVIX, I don't know what it's going to take to really move the needle from an options perspective. The ADV falling off a cliff again, down to 4,800 contracts a day. It's down about 700 a day from this time last week. That is liquidity that SVIX can ill afford to lose. But c'est la vie, let's keep rolling out to the product Michael just hates. He spits venom at it every day. It's UVIX. A 590 down a little over half a point, about 0.6 of a point. UVIX looking ripe for a little reverse split action out here as well. And when that happens, listeners, strap in. It's a wild ride. 29,000 contracts on the tape today. The ADV is 47,000, down about 5,000 from this time last week. So this is one of the few times of year post reverse split where UVXY kind of loses its liquidity edge over UVIX. Now they're both averaging close to 30,000 contracts a day. So I suppose if you wanted that excuse to trade UVIX because it has the better leverage and the only thing holding you back was liquidity, well, this is the one time a year, or really one time every year and a half to 2 years where you could say that. Let's throw VXX into the mix as well. Why not? VXX was at about 27 even coming into the start of the show. Still hanging out right around there. Down about a little over a point, about 1.15 points. Putting up a whopping 19,000 contracts today. That is kind of light volume, obviously, listeners. The ADV is 35,000 contracts a day, down 10,000 contracts from this time last week. So December comes for us all, and apparently it came for all the vol ETPs this week. Michael, I know you love your UVXY. Anything catching your eye in the rest of the vol ETP ecosystem for this year?
Well, yeah, like you're saying, UVIX is due for a reverse split, although I believe the last one was a 3 handle when it actually did the reverse split. So it could be quite a while before they get around to splitting that one. And again, I would rather trade UVIX all day because it's got more beta slippage, being 2x than UVXY, but the liquidity is just not there for my trading. So I'm stuck with UVXY.
What about post split? Do you dive into UVIX then when things get really rocking?
It truthfully, from what I've seen, it doesn't change the liquidity for me. It all comes down to if I can get the trade on. There is one interesting challenge that I have. So some brokers restrict trading in certain tickers because of K1 issues. So for instance, Interactive Brokers will not allow me to trade UVXY in any way, shape, or form in an IRA, but they'll let me do UVIX all day long. So for my IRA accounts, I'm trading UVIX exclusively. For my margin accounts, I'm trading UVXY. And it's simply because the broker says, hey, the issuer is going to send out these K1s, and if you're an IRA, you're not liable for taxes either up or down, so we're not going to let you trade it anymore. I think they'll get around to UVIX eventually, but right now they let me do it.
You can sling the 2x levered, but 1.5 levered. We draw the line at that, sir. Out there. So interesting stuff. Mr. Rhoads, before we head on into the crystal ball, anything catching your eye in the vol ETP universe, and are you slinging your weekend UVIX trade again, sir?
I'm slinging my weekend.
Or has Michael lured you to the dark side of the weekend UVXY trade, perhaps?
No, I'm sticking with my UVIX trade for right now. So,
anything catching your eye out there, sir, before we roll on?
Nah, other than really, I feel good about short vol just with how steep everything is.
All right. Do we feel good enough to win the crystal ball? I guess we'll find out, listeners. Our final crystal ball of 2025.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we once again attempt to wrestle with the vol gods and see what they have in store for us this week. This week, they have a 13 handle in store for us, which, spoiler alert, neither myself or Dr. VIX had on the show last week. I was at a 15-15. Russell was feeling his oats at a 15 double, a 15-55. And we blew through that 15 handle, never looked back, blew through a 14 handle as we're hanging out right now. Right at the end of the show, 1377 in VIX cash. So spoiler alert, no winners for our final crystal ball for the year, which does remind me, someone pointed out recently, we have to get going on our VIX crystal ball for the end of next year contest, which is always a fun time. We get a lot of people to weigh in from the vol markets on where they think VIX will go out at the end of the year. We also have to pay off this year's contest pretty soon. So we have a lot of calculation work ahead of us out here. But Michael, as our guest, and because you didn't get a chance to lose last week like Russell and I did, you get the dubious honor of going first. What are you feeling for VIX on the first Friday of the new year, sir?
For January 2nd?
Yes, sir.
Give me a 14-17.
14-17. So a little pop, but nothing crazy, nothing explosive out there. I wrote 17-17. That should probably, there we go. 14-17. There we go. So a little bit of upside, but perhaps not much. I was technically closer, Russell, so I guess I will go next, even though I wasn't that close at all. I don't hate where Michael's hanging out there this week. Let's speak a little bit more vol juice into the upside. Let's go to a 14.45. How about that for this time next week? All right, Mr. Rhoads, that leaves a lot of room for you and Gretchen to dive right in. What are you feeling for this time next week? Oh, no, you've been muted, sir. What happened?
I'm all upset because Gretchen said 14-17.
Oh, did she really?
Michael, I put a number in and it spits out a number.
So do we have a rare tie? Are you going to try to carp him?
No.
You're going to go 14-18?
I'm gonna do exactly what you shouldn't do when you're relying on a quantitative system and override it.
Oh.
And I'm gonna go with 13-33.
Wow. All right.
I think there's not going to be a whole lot going on, and people just not doing an awful lot next week.
Cutting the legs out of Gretchen's prediction. Wow. All right. 13-33. Listeners. Oh, we got a 13. The Queen just went 13-30 in our chat, too. So there you go. You and her.
Of course she did.
You and her on the same page. She's usually pretty scarily.
And she's good.
She is good. She smokes us all in the vol prediction game. So, so you should feel good about that prediction. Unfortunately, that music, listeners, means we come to the end of our final. That's wild. I was thinking this was our second to last, but actually, no. It is our last one of 2025, which means, of course, we have to start crunching numbers for this year's prediction game. And Michael, stay tuned. Keep an eye on your Twitter DMs or this Twitter in general. We'll be looking for your end of year vol prediction for VIX pretty soon as well. So it's a fun game. Everyone always chimes in. Then they get mad saying we're just looking at seasonality. They want us to do an average throughout the year. We've had many debates, but we're not doing that. We're just doing straight end of the year. So look for that. I'm not sure if you waited on this year. Maybe you did. In which case, maybe you'll win a fabulous prize, sir. We shall see. But we have to crunch all the numbers once VIX Cash officially goes out, which is obviously not yet, listeners. Next Wednesday, we will know. Last year, it was Steve Sosnick from IB who won, weirdly enough. So, as he just reminded me recently again, he's like, hey, I won your contest. I was like, oh, yeah, it means we got to do another contest soon. So, look forward to that. Fun prizes will be had for the winners, if there are any. Remember, you got to come in within our show margin of victory, which is the 10th of a point, which is a hard thing to do over the course of a full year. But Steve Sosnick did do it. He is in our Crystal Ball Hall of Fame, as well as some listeners out there. I have to go find their names out there. So if you hit it, listeners, you'll win some fun prizes. Don't worry. But that music, Mr. Michael, means we are done with vol views for this week and indeed for the mad year. That is 2025. But before we go, if folks want to check out all your UVXY musings, where should they go? What should they do?
Easiest place to find me is on UVXY.pro. It's a website where I've answered all the questions I've been peppered with over the last decade. All the timely stuff is on my Twitter page or X page, and I'm looking to start my alert service. I don't know what to call it. First of the new year, so keep up on my X page to see when that drops.
Oh, I didn't know about this. UVXY.pro. There we go. A new landing point. So you don't have to just follow them on Twitter, listeners. You can go to UVXY.pro and go deep into all things UVXY. And Mr. Rhoads, if folks want to go deep into your vol musings, where should they go? What should they do?
Well, first off, for the person that TPs my house on a regular basis due to my bad VIX calls, I'm moving from 152 to 149. So don't bother these new people, okay? So
people do get fired up about your vol musings. Yes, that's true.
So, and beyond that, yeah, just I put things out on Twitter. There's a professor and I that are going to launch something new in the first week of next year, and I will talk about it next week.
Ooh, the first week.
Finalizing exactly what we're going to be doing here.
Coming hot out of the gate, so we'll look for a hot announcement from Mr. Dr.
I know,
VIX.
it's me and a Purdue professor.
Ooh,
So,
the enemy.
2 smart schools.
Hanging out with the enemy out there.
Yeah,
so stay tuned.
Exactly.
Stay tuned for a hot announcement from Dr. VIX coming on the show next week. Going to break vol news here on the show next week. And of course, while you're checking things out online in this kind of quiet end of the year, check out our friends over there at Tasty Trade, tastytrade.com/podcast. I mean, all of our brokers love all of our listeners, but they really love the Vol Views audience, because you folks are the cream of the crop. You folks are out there slinging a lot of vol. You tend to know what you're doing. All brokers like you. So see what Tasty Trade has to offer. tastytrade.com/podcast. In fact, check out all of our sponsors on the network. They are the reason, after all, that you folks keep getting so much content out here and have done so for, in January, it will be 19 years, which is absolutely wild, listeners. So make sure, if you like the stuff, make sure you check out all the sponsors and tell them, hey, you heard about them on the network. It makes everyone happy. It's a virtuous circle at the end of the day. And of course, if you don't want that circle to close, join us immediately after this show for the official after party of Volatility Views, known around the globe as Options Oddities. Should be a fun time here this week. We'll get up to some mischief, even though it is a kind of quiet holiday week. Then, of course, we're back to wrap everything up after the closing bell with the Hot Options Report. For we're back again for the final trading week of the year next week, and then back again to kick off a new vol year and pay off our big 2025 contest as well with our next episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.